Hey everybody, how is it going today? Well, we had a nasty down day in the market, so in this video I want to talk about mainly the overall market, but I do want to get into a few stocks, and then after that I'm going to get into my trading activity like I always do. But let's get right into the QQQ, or the NASDAQ. I like to start off with the NASDAQ because it usually ends up leading the market, and unfortunately right now it's leading it down. I thought for sure when the day started we had a great chance of getting above this little moving average cluster right here, but that was not the case. It just ended up selling off the entire day and ended up closing down below this support level. So from a technical perspective, this is just a horrible looking chart. It looks like we're going to have continuation to the downside. Had a little bit of a tiny bounce and it just could not gain any traction on the NASDAQ, and then selling immediately resumed and overwhelmed all of the buyers. So it doesn't look good right here. I think we are destined to be retesting the support area right around 320 on the QQQ. So after seeing a day like this, what I did for part of the day was get my buy list around. Once the market looks like it's probably going to end up accelerating to the downside, I like to get my list done of the stocks that I have been wanting to purchase for a while, because normally in the heat of the moment when the market is crashing, it's a little bit difficult to step in front of that moving train. But if you have a plan in place, at least for me, I find that it's easier to stay disciplined to it and actually have the courage to jump in and grab some of those stocks that I've been wanting to buy for a while, or even add to my current positions. But man, the way things are looking, it is looking pretty weak at the moment. But let's jump over to the SPY, or the S&P 500. You can see the S&P 500 jumped all the way up to the 200. I was pretty optimistic at the beginning of the day, and it just sold off just like the NASDAQ, all the way down to that 50-period simple moving average, and it is threatening support right around 437. And if I had to guess, it's probably not going to hold, and we're probably going to be testing these lows again. And I'm thinking that if we get down to these lows on the S&P or the NASDAQ, the support area that we had before, it's probably going to break, and it's going to get pretty nasty in the market. It's going to be one of those fast accelerated sell-offs. So all the more reason that I want to be prepared if this thing does end up rolling over. But let's take a look at the diamonds, or the Dow Jones. This one had been the best performer, and you can see this chart actually looks pretty decent. It certainly looks a hell of a lot better than the other two, but man, jumped above that 200, was holding it for a couple of days, and then boom, right back down below it, and it just got pegged right at the 8-period exponential moving average. So we do have these moving averages and the support area right here below the Dow. But I think if the NASDAQ just starts accelerating to the downside, it's going to bring down the Dow Jones for sure. Let's take a look at the IWM. And you can see the IWM looked like it was getting going as well, and just had a huge reversal, and now it's right down at the bottom of that channel, and I'm guessing this channel is going to be toast, if not tomorrow, probably next week for sure. It just looks like there's just way too much selling, and I'm guessing a lot of people out there that have been wanting to do some buying, they're probably pulling their hands back, like the dinner check just came to the table, because I think they're in wait and see mode. But let's take a look at the XLE. One sector that I've been looking to get into more heavily has been the energy sector, and we had a big nasty technical day for the XLE. So you can see it broke back down through this support area. It landed right at the 21, and I'm guessing that's probably not going to hold, and it's going to at least come down to the 50, and I wouldn't be a bit surprised if it breaks down below that as well, because this has been in a long uptrend ever since the beginning of January. So a halfway decent sized pullback would be absolutely natural, and if that does happen, I'm definitely going to buy some more energy stocks, because I think as long as the price of oil doesn't completely crash, a lot of these oil companies are very profitable at this level, and they should be posting some pretty good earnings for at least the next couple of quarters. So I definitely want to be in some of these stocks. Another one that was crashing today was the gold miners. You can see the gold miners broke down below all of these moving averages and almost made it all the way down to the 50-period simple moving average on the GDX. So if you've been looking to get into some gold stocks, it looks like you're probably going to get an opportunity to grab some of those at some lower prices. All right, well, before I get into some market charts, I just want to go over this one real quick. This was put out by J.C. Peretz, And this one just shows the performance of the S&P 500 versus commodities going back 50 years, all the way to 1970. And going back to all the way to the beginning of this chart, you can see that the S&P 500 was in a period of underperforming commodities going all the way to 1980, and then S&P went on a run and outperformed commodities going all the way to the year almost to the year 2000, so right around 20 years. Then commodities took over and cycled up, and that lasted about 9 years until this 13-year run that we've been in right now. Now, there's a lot of people that are thinking that commodities are entering a super cycle, and this could be the very beginning period of commodities outperforming for an extended period of time. So if we do get a pretty decent pullback in some commodity stocks, it wouldn't be a bad thing to do to add some commodity stock exposure to your portfolio, and that's what I actually did today, and I'm going to get into that a little bit later. I've been wanting to do it for quite a while, so it's just a coincidence that I got this chart today. I didn't jump in just because of this chart, but I wanted to show you the significance of these commodity runs versus the S&P 500 and how important it is to have at least a little bit of exposure to that in your portfolio. And then we get into these potential periods of outperformance of commodities versus the S&P 500, you know, it's probably a good idea to be overweighted in some of these things. All right, well, the next sector I want to talk about are the consumer staples, and the consumer staples have been outperforming. This is the XLP, so this is the Spider Select ETF for consumer staples. You can see that's trading at about $80 a share. This one actually pays a dividend of about 2.1%, but when you get in times of uncertainty in the market, it seems like smart money makes a flight to safety, a flight to quality, because cash is king, and they want these stocks that are paying dividends, and it's always nice to have at least a couple of these in your portfolio. I like to be well diversified in my portfolio, and then when we get in times of rotation, that's when I like to start moving bigger portions of my money into those sectors that have been outperforming and look like they're going to continue to outperform. And I wouldn't be a bit surprised if the consumer staples do end up outperforming for a while, just like commodities have the potential of doing. But another one that I like to look at is the VDC, and that is just Vanguard's product, the Vanguard Consumer Staple ETF, trading at about $207. This one pays a yield of about 1.9% at the moment. So that's another thing about grabbing these ETFs. You can also get at least somewhat of a yield. But getting into some of the stronger ones, let's take a look at J&J. You can see J&J has been in a long base going back well over a year. Now it looks like it is finally starting to break out here and hold that breakout. So I wouldn't be a bit surprised if J&J outperforms going forward. They have a dividend yield of about 2.5% at the moment. One that I own is Kraft Heinz. I've actually been in this one for quite a while. This is some of the consumer staple diversification that I have in my portfolio. My average cost on this one is well under $30 a share. Right now it pays a dividend yield of 3.7, which is pretty darn good for one of these types of companies. My yield is well over 4% though, so I'm sitting tight with KHC. Another one that is doing pretty well is General Mills, GIS. You can see GIS forming a little bit of a cup and handle, rounded bottom, whatever you want to call it. Either way, it's breaking out to new highs, up over $73 today. And this one at the moment pays a dividend yield of 2.8%. So even though it's had a pretty nice run, that yield is still almost 3% at the moment. Another one that I own is Waste Management. Been holding this one for quite some time as well. I think my average cost on Waste Management is right around $95 or so. So I've already had a pretty good capital appreciation in this one. And right now they're paying a yield of 1.6%. When I got into it, the yield was higher, but this is a very high quality company, very large moat, very difficult for other companies to come in and challenge their business. So that's one of the reasons I like having this one in my portfolio, just to add some stability, and pays a halfway, at least when I got in, it was a little bit better of a yield. Right now only about 1.6, but still not terrible. Next one is Kellogg's. You can see Kellogg's breaking out to, I guess that's That's definitely a new 52-week high, but it's going to be challenging this high from a couple years ago, right around $72 pretty soon. Kellogg's plays a yield of 3.4%, so this one not a bad one either. Another one I like to look at is Smucker's. JM Smuckers, you can see this one is on the brink of breaking out to a new high as well. So these things are very strong, and Smuckers pays a dividend yield of 2.75%. So not a bad dividend for Smuckers. And of course we have Warren Buffett's favorite, Coca-Cola. Coca-Cola up to $66 today with a dividend yield of 2.7%. So Coke, definitely outperforming. People are not going to stop drinking Coke if the market goes down. So this is obviously one a lot of people like to flock to. Another one is Colgate. You know, if we go into a recession, Colgate-Palmolive has products that people are still going to be buying. Not quite up to challenge that old high of $86, but it's getting pretty darn close, and Colgate has a yield of about 2.3% at the moment. Now, another one that I own that has been getting hit pretty hard is 3M. Now, my average cost on 3M, I want to say maybe right around 160 or so, so I'm down just a tiny bit in 3M, but they have some litigation issues going on, but that will be resolved before too long. You know, there's these temporary issues that knock down these stocks. This is when I like to accumulate more, and I have been accumulating more of 3M lately. Right now, their yield is about 4%, so I think it's a pretty decent time for me to be adding more 3M, and like I said, that's exactly what I've been doing. Another one that I own is the VYM. This one is the Vanguard High Dividend Yield ETF. I think my average cost on this one is just under 100, so I'm up a little bit on this one. And this one pays a yield at the moment of 2.7. One stock that I was watching very closely for a while, I wanted some exposure to gold, and I had this one on my watch list. I was so close to buying it a couple times right here, and I just got greedy. I thought it was going to break 50, and that's when I was definitely going to start adding Newmont Corporation. And every time I see this chart now, I just want to punch myself in the groin for about 5 minutes straight for not buying this thing in the low 50s. And I literally stared at this thing for weeks and weeks and weeks. And I was going to buy it once it broke 50, and I don't know, just a beautiful chart, big long consolidation. You know that it probably was going to break out of this thing to the upside eventually, just because gold was looking like it was about to break to a new high. So I should have just bought this one back when I was staring at it. But I just wanted to show you guys those type of stocks. They are certainly outperforming. It wouldn't hurt to add a little bit of this to your portfolio, especially, you know, if we get a halfway decent pullback in some of these. Okay, so let's get into my trading activity for the day. I did not make any day trades today. I almost did, and I'll get into that in a minute. But one that I did add to my long-term portfolio is Southern Copper Corporation, ticker symbol SCCO. I have had my eye on this one for quite a long time. So if we back the chart out, you can see this thing has been in a nice long cup and handle, rounded bottom, whatever you want to call it, for well over a year. And I was watching this thing as before it was breaking out. I told myself I was going to buy it on the breakout. I didn't do it. The thing ended up running, and then I told myself if it comes back to the support area, you want to add it. So I added it today at $67.89. If it does pull back to this 200 period simple moving average, probably going to double down on it and you know, just kind of sit on it and see how commodities do. If the commodities do end up going on a run, I do think copper is probably going to be a good performer. Again, both of these things are just my opinion. There's no guarantee that commodities are going to run, and then of course there's no guarantee copper is going to run with them. That is just you know, a little hunch that I have, so I'm going to get some exposure to this sector. And this stock actually pays a pretty decent dividend, right around 5.5% at the moment, but the payout ratio is a little over 70%. And that's a little higher than I would like. But like I said, if commodities do end up running, they should have plenty of enough cash to fund that dividend. But let's get to the next one. This is a little contradictory to what I've been saying in the whole video. I actually bought some call options at TQQQ at the end of the day. I bought the 47 call at 25 cents. They expire tomorrow, so I'm just kind of gambling that that's going to pop up tomorrow. It seems like lately once the market runs one way, they run it the other way the next day, especially if it's kind of a big day. So just took a little bit of a gamble on this one, a little bit of a hunch that they might run it up tomorrow. Not a big position at all. So if it doesn't, not the end of the world, but those were the trades that I made today. Now, I almost made a trade in Redbox RDBX. This one was weird. Let me go to the minute chart. I'll show you how this one shaped up. I talked about this one in my Patreon video. This one just, I don't know. I thought I was going to get screwed over on this one because it had a nice gap up, started to pull back, came down to this support area, had a nice reversal. So I put in an order to buy it at $2.67. It actually hit that price twice, and it was a stop market order. So it should have executed it no matter what, but for some reason it did not execute my order. It rolled over. I would have placed my stop below this area right here, so it would have stopped me out for a small loss. But later on in the day, let me go forward a little bit here. Let's see if I can move this up. I was watching this area right here, and I put in an order to buy it on this breakout right here, and then I removed it just as it was moving up into it. I don't know. I just kind of got a bad feeling. But this would have been my buy where it stopped me in at. And as we can see, the thing went on a pretty decent run the rest of the day. Really ran into the 12 o'clock hour Eastern time. But I guess if I would have taken this trade, I probably would have made a little bit of money. But I don't know, just kind of got a bad feeling, especially after, it wouldn't stop me in, and then it turned around and it would have been a loss anyway. But I guess the fact that it didn't stop me in, that probably should have made me feel good about it, and I should have taken the second one. But hey, it is what it is, whatever. I will get the next one. But those were my trades for the day. If you guys know any trades that are setting up, please leave them for me down in the comment section. I appreciate it when you guys do that for me. And also, don't forget to like the smash button. I appreciate it when you guys do that as well. But I'm in the video right here. Thank you so much for watching all the way to the end. And until next time, take care, everybody.